Ladies and gentlemen, good day, and welcome to the Q4 and FY26 earnings conference call of Genus Power Infrastructures Limited, hosted by Kaviraj Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. This conference may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Abhijit Mukesh Purohit from Kaviraj Securities. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. Kaviraj Securities welcomes you all for Q4 and FY26 earnings conference call of Genus Power Infrastructures Limited. On the call today, we have with us Mr. Kailash Agarwal, Vice Chairman, and Mr. Jitendra Agarwal ji, Joint Managing Director. Now, without further delay, I hand over the call to Kailash ji for his opening remarks, and post which we can open the floor for Q&A. Over to you, sir.
Thank you, Abhijit. Good afternoon, ladies and gentlemen. A very warm welcome to the Q4 FY26 earning call of Genus Power. The results, investor presentation, and press release are uploaded on the stock exchanges and company website. FY26 has been a landmark year for Genus Power, reflecting the company's strong execution capabilities, deep domain expertise in advanced metering infrastructure services, and sustained momentum in India's smart metering transformation journey under the RDSS framework. During the year, we witnessed accelerated execution across multiple projects supported by all 24 AMISP projects, achieving operational go-live milestones, healthy order book conversion, and strong traction across key state utility programs. For Q4 FY26, our standalone revenue stood at 1,524 crores, 1,524 crores, representing a strong growth of 63% year-on-year and 36% sequentially. The strong performance was driven by accelerated project implementation across key states, increasing rollout intensity and healthy execution momentum across our smart metering portfolio. During Q4 FY26, there was some moderation in gross margins, primarily due to change in product mix, with a higher contribution coming from project business involving elevated raw material consumption towards hardware, software, communication, infrastructure costs. Additionally, imported raw material uses in meter manufacturing was impacted by exchange rate fluctuations during the quarter. However, despite these temporary pressures, the company continued to maintain healthy profitability metrics through scale benefits and strong execution efficiencies. On the profitability front, Q4 FY26 EBITDA stood at 284 crores, up 36% year-on-year, and profit after tax from continuing operations for Q4 FY26 stood at rupees 181 crores, registering healthy growth of 41% year-on-year. For the full year FY26, standalone revenue stood at rupees 4738 crores, reflecting a robust growth of 94% year-on-year. The scale-up in revenue was driven by sustained acceleration in smart metering project execution, rapid ramp-up across multiple live projects, and strong progress in installations, integration, and commissioning activities. FY26 EBITDA grew up by 104% year-on-year to rupees 960 crore. EBITDA margin for FY26 improved by 102 basis points on year-on-year basis to 20.3%. Reflecting operating leverage benefits, disciplined execution capabilities, and efficient cost management despite higher scale of operations. FY26 PAT stood at rupees 605 crores, reflecting sharp growth of 106% year-on-year. PAT margins improved to 12.8% during FY26, supported by sustained execution momentum, operating leverage, and improving scale efficiencies. One of the most important milestones achieved during FY26 was that Genus Power crossed installation of more than 1 crore meters under RDSS program, reinforcing our position amongst the leading smart metering players in the country. We continue to maintain a strong manufacturing throughput, with current manufacturing capacity now exceeding 18 million meters annually. This capacity enables us not only to support our own AMISP project, but also supplies to utilities and other AMISP operators across the country. As on 31st March 2026, our total order book, including all SPV and the GIC platform, stands at approximately 25,173 crore net of taxes, attributable primarily to Genus' own MISP projects with concession periods extending over 8 to 9 years. This provides strong long-term revenue visibility and a sustainability annuity type business model for the company. The OGL momentum continued to strengthen during the year, and all 24 of our AMISP projects totaling to awarded meter base of 3.61 crore meters have achieved OGL, and this significantly improves our long-term cash flow visibility as recurring O&M revenue start scaling up over time. Once project transition into operation phases, billing visibility and recurring cash flow will become much stronger. We remain highly confident on the long-term opportunity landscape for the smart metering industry in India. Against an estimated requirement of around 31 to 30 crore smart meters in the country, only around 15.6 crore meters have so far been tendered, and only a small part of the overall opportunity has actually been installed. This clearly indicates a substantial multi-year growth runway for both the industry and Genus Power. At the same time, we continue to actively monitor upcoming tenders opportunities under RDSS across various states. However, our bidding approach continues to remain selective and return-focused, prioritizing projects where our integrated MISP capabilities provide strong execution, certainty, and sustainable long-term profitability. The debtors days have started coming down, have reduced from 187 days as on 31st March 2025 to 89 days as of 31st March 2026. Inventory days as on 31st March 2025 was 127 and 104 respectively. Including the unbilled days, the total working capital days, which stood at 343 on March 25, has reduced to 274 days on March 2026. We expect improvement of another 50 to 75 days in this current year. As on 31st March 26, company had a total net debt of 1573 crore, which is about 968 crore more than the net debt of INR 605 as on March 25. The increase in net debt is primarily from short-term loans and that will start reducing from FY28 onwards. The expected peak net borrowing by the company will go to about 2,000 crores. As on 31st March 2026, company had a cash and cash equivalent of approximately 719 crores in the form of fixed deposits and other current investments. As on 31st March 26, the company had investment of approximately 487 crores in the joint venture platform and SPV of joint venture platform with GIC. Company expects investment of another 600 to 700 crores in the joint venture platform in next 2 years, that is FY27 and 28, and first quarter of FY29. Alongside our core smart metering business, we also making steady investment in adjacent growth opportunities, including smart gas meters, smart water meters, and exports. In India alone, the gas metering opportunity is estimated at about INR 35,000 to 36,000 crores spread over next 3 to 4 years. Similarly, we believe water metering will emerge as a significant long-term opportunity both in India and globally as digitization and resource optimization become increasingly important for utilities. On the working capital front, we remain focused on balancing rapid growth with prudent financial discipline. Simultaneous execution across multiple large-scale projects requires elevated working capital investments, particularly in inventory and field deployment activities. However, as additional project transition into operational phases and recurring revenue scale up, we expect gradual normalization in working capital intensity and continued improvement in cash flow generation over the coming quarters. Looking ahead to FY27, we remain highly confident of sustaining a strong operational and financial momentum underpinned by robust execution visibility, a strong and diversified order book and pipeline, and continued acceleration in smart meter deployment across India under the RDSS framework. We expect FY27 to mark another phase of significant scale-up in project execution, with the company well positioned to achieve revenue in the range of approximately 6,000 to 6,500 crore rupees, driven by increasing rollout intensity across existing projects and continued conversion of the large executable order book into revenues. So the guidance for FY27 is 6,000 to 6,500 crores. Now I open the line for question and answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Aditya Velekar with Axis Securities. Please go ahead.
Yeah, thank you for the opportunity and congrats for the good set of numbers. My question is with respect to our addressable market. So you stated that it is 31 to 32 CR and almost 15 CR are still remaining. So just to understand means how this tendering will happen in this fiscal and in the coming fiscal and what will be our market share you are targeting from that?
The overall market is understood well. So as on date, we expect 31 to 32 crore consumer base of meters in the country, out of which around 15 crores has already been tendered and 7 crores has been installed. So there are more than 24 to 25 crore smart meters to be installed in this country, which is remaining. And 15 crores has been already tendered, and further there are tenders of around 5 crores which are already out, and more than 4 crore tenders are in the pipeline. So we expect in this financial year, tenders of 9 crore meters will be out, and remaining quantities will come in the subsequent years. So this is how we see the whole market. And when it comes to market share, we are confident that whatever the market share we have been maintaining till today, we will be definitely be able to maintain our market share.
Understood. So my second question with respect to the working capital. In this financial year, there is one line item in the working capital which is increasing our working capital. Our operating cash flow before working capital has grown handsomely, but because of one line item called increase or decrease in contract assets, almost 836 CR of working capital is getting trapped in that, which is causing a negative operating cash flow post working capital. So if you can explain that part, what exactly is these contract assets, that will be helpful.
Basically, these are all the inventories and whatever the investments that is happening in the platform. So when we talk about cash flows, one thing we have to understand here is let us see that. Let us compare in 2 years. Let us compare FY25 and let us compare FY26. In 25, company made a growth of almost 1,200 crore rupees in revenue. With cash outflow, the increase in cash flow was around 950 to 1,000 crores. So that is almost 80-85% of the increase in revenue. This year, you will see that company has grown approximately, the revenue is grown by 2,300 crores in comparison to FY25. And again, the cash flow which is negative or the cash flow increase or the working capital requirement increase is by almost 900 crores. So which comes to around 40% of the revenue what company has been increased. So you will see that from 80, whatever the revenue done, the amount of working capital required was 80%. Now the amount of revenue done, the working capital requirement is almost 40%. In coming year, this financial year, it will come down to 20%. And next financial year, it will come down to negative. Negative means the positive cash flow starts coming. So you have to compare it like that. When we say contract assets and everything, that is a part of the whole inventory or the money invested in the SPVs or the platform and all put together.
Yeah, understood, sir. Yeah, just one last question. If you can give us the guidance of EBITDA margin for fiscal 27 also, that will be helpful, and any tax guidance.
So for this financial year, yeah, Kailash sir, you can take it up.
So, whatever we have achieved in FY 26, we are giving a guidance of almost 2.5% lesser for this financial year, because we are looking a surge in raw material prices, because that is because of this war and everything, petroleum prices going up and chips and all. So basically, we are looking for a EBITDA of 18% for this for FY 27.
And CapEx guidance, sir?
CapEx, there won't be any major CapEx. The smaller CapEx, which is a regular CapEx, 10-20 crores required for a regular things, dies and molds and something like that. Otherwise, there is no major CapEx in this financial year.
Understood. I'll get back in with you. Thank you.
Thank you. The next question comes from the line of Mahesh Patil with ICICI Securities. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, can we get the number for the meter installed in Q4 and the total installed meter base?
Q4 we installed around 30 lakh meters, and in the total year we installed 87 lakh meters under the RDSS program.
So what would be our cumulative installation, and how much of it would be with operational go live?
All the projects are operational go live now. So operational go live is never on. It is generally, it has a lag of 2 months. So whatever the meters we have installed in last 2 months, they will start coming under the SAT. So it is a 60 days runway. So not every meter which has been installed yesterday is operation go live. It is the project which comes under operation go live. So all the projects which Genus is undertaking right now, there are around 24 projects which are operation go live.
Okay. And sir, can you give us some details on the pipeline? You have mentioned that around 5 crore meters are under bidding, right?
So right now, the ongoing tenders are from Haryana, MP, Punjab, Tamil Nadu, which are constituting around 5 crore meters. And further, we expect more tenders from Haryana, and some more quantities from Punjab, Delhi, and some large quantities coming from West Bengal, Kerala. So all those put together, I expect tenders of around 9 crore meters coming this financial year.
In FY 27. Okay. Okay. And sir, of this pipeline, right, 31 CR of meter pipeline that you highlighted, around 25 CR is under RDSS, right?
So currently, 23 crores are sanctioned at the RDSS. Furthermore, are going to get sanctioned. And the total requirement as on date, according to the industry data, is there are around 31 to 32 crore consumers who will be replaced with smart meters over the period of next 4 to 5 years.
Okay. Thank you. Thank you so much.
Thank you. The next question comes from the line of Abhishek Taparia with Emkay Global Financial Services. Please go ahead.
Congratulations, sir, on a good set of numbers. My first question is it possible for you to share guidance for...
Can you speak a little louder, Mr. Abhishek, please?
Yeah. Is it possible for you to share guidance for FY28 in terms of revenue and meters? Some idea, some gist?
Give us 1 quarter, Mr. Abhishek. We'll let you know in next quarter.
Okay, fine. And second will be the raw material costs have been increased substantially. So do we have any pass-through clause, or can you explain what was the mix impact and what was the commodity impact, and which is the main commodity that is impacting the margins?
So there is no pass-through in our contract. These are all fixed price contracts. So whatever is either increasing or decreasing, it has to be taken care by the company. So as we have already given the guidance, so which has taken care of all the pressure which is coming on the raw material. So that is why we have reduced our guidance from 21% to 18%.
Okay. And so how much was the mix impact change, and what was the commodity price change like the rupee change or rupee depreciation change? Can you quantify the change?
So we give just as an absolute number or a total number. So all these will be covered, whether it's an exchange or commodity or any chips or any electronics, all is covered in our guidance of the EBITDA reduction of almost 2.5%.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Pranjal Mukhija with Growth Sphere Ventures LLP. Please go ahead.
Yeah, I'm audible.
Yes, Pranjal, please go ahead.
Hello, Kailash ji. Hello, Jitendra ji. Thank you for giving me this opportunity and congrats on a great set of numbers. So, sir, I have a couple of questions, slightly business-related questions. In our presentation, we mentioned that, there are some 250 people in our device R&D team and some 225 people in our software development team. If you could provide like a breakup and trajectory of these people and just try to understand like how are they sort of segregated in different parts of the business, let's say a smart meter division or a HES and RF division or a software division. If you could just provide some highlight on that.
So basically, the R&D is divided in two parts. You can say, if you see from the 36,000 feet. So one is the R&D of devices, which takes care of the communication, hardware, firmware of the meters. And one is the application software team, which takes care of the HES, MDM, and all the application and WFM, all the application-related software works. So as you said, we have around 300 people in the device R&D and around 250 people in the software R&D. From the top, it is divided like this.
Right. But product level, will it be possible to get some details as to like project-wise or like, product-wise, how is this team segregated?
It is not a segregated project. They are all R&D team. They're developing products. The application software team is developing HES, MDM, WFM, all the application-related products. And the device team is developing all the meters, all the hardware, firmware, all the communication products. So this is how we have divided the two. It is not divided project-wise or every individual is working in a separate project. It's not like that.
Right. And sir, following up on that question, if you could also provide some background of these people and like what kind of engineering schools are we hiring these people and attracting them from? I'm asking because, this business is inherently shifting from the pure hardware to an increasingly embedded, product offering kind of a business with a mix of both hardware and software. So what kind of different schools are we going to attract, young talent, especially on the software side?
So this is very interesting. One thing I can tell you is this was always a very tech business. It's not that it is moving from a hardware business to a tech business. Electricity meters was always a tech business, and we are Government of India recognized R&D from last 25 years. And we have more than 300 people in the R&D historically from last 10, 15 years. So we have been investing a lot on the R&D. Just to clarify to you, it's not something new what we have been doing. And generally our focus has always been engineers from the NITs. So they are the people who stay back with us long. We just celebrated our Founders Day a few weeks back, and our CTO is with us from last 25 years. So we just celebrated those kind of events. And most of the R&D engineers are from the NITs and rest of the institutes.
Right. So I was asking this question because I was recently at the CII Smart Metering Conference that happened in Delhi. So Sheel sir was also present there. So the government there sort of laid down a proper roadmap for tech and software part, and how they want to basically increasingly focus on using the smart meter data to sort of unlock actionable intelligence for grid planning. And this can be forecasting, grid management, some reliability analytics, even the network planning and the optimization in the whole distribution sector, and actually mainly the visibility part of distributed energy resources. So, and I just wanted to understand, the point of asking these questions was just to understand, how are we building our business and positioning our business to also sort of capture these new emerging opportunities? And how are we also trying to sort of integrate into the whole India energy stack piece? Because that is also an interesting development that's taking place.
I mean, absolutely, that is a very, very interesting development that is taking place. And the good part is that Genus could envisage that being part of the ecosystem. We could envisage that 3-4 years back. That is the reason we have one AMISP who started their own software division, and we were very clear that we are not going to stop only at HES MDM. This is the beginning of the software division. We have not created or invested so much money in our software business only for the current HES MDM products. So very rightly that, and in this energy stack also, AMISPs will play a very important role. All the smart meter data to IES by integration MDMS will be done by the AMISPs. And TSPs will be using this data to create value-added services, where we will also play a major role. So the reason Genus went from a purely hardware company to a solution company and ended up becoming a software company, but the reason is exactly what you have spelled. We could sense that 3-4 years back when entering into the AMISP business that this is going to be the future, and that is where the whole investment is Genus is making in the software business.
Right. Sir, I wanted some update on our proprietary RF mesh that we've developed, and just wanted to understand what is the on-ground development of that mesh online, and what is the sort of proportion of this RF mesh that we're going to supply in our own current order book, and just wanted to understand is it a completely interoperable solution, or does it only work with us with our devices and with our network?
It is definitely an interoperable solution to whichever the meters also, and it is the same whether it is Genus RF or it is the RF from Node or from Itron or from any other company. There's no difference in the sense that Genus is proprietary RF is only for the Genus meters. It cannot be interoperated with the other meters. So it works same for the other players also the way it works for Genus. Right now our major focus has been, of course, Genus is using its own RF solution primarily for its own projects. And slowly and gradually, our major installation is happening in the RF solution.
Right. Any plans of selling the solution outside?
Yeah, absolutely. We have been talking to different customers, and in future we will be selling these solutions too. So we always have a very clear policy as Genus. We are there's one customer for us is AMISP, which is we are own, and one is the AMISPs are outside the Genus projects. We are selling to all of them. Currently, we are selling more of non-RF meters, but yes, over the period of time, we will sell them RF meters also.
And we might be on an average be saving around $1.5 per meter from royalty, right? And this is assuming the meter market selling price would be some 2,300, 2,400 rupees ex of the AMISP bit.
It is a very, very difficult question always to answer because it's a very custom built product. Different customers have different requirements, different specs. There's no, it is not a standard commodity that it is like that. So,
but sir, how much would be the savings?
I'm sorry to interrupt, Pranjal. I would request you to rejoin the queue so that other participants could ask their questions. Thank you. The next question comes from the line of Keval Barot with Axis Securities. Please go ahead.
Thank you for the opportunity. So, sir, I just wanted to ask a question on front of export opportunity status for the company for FY27 and also regarding the gas meter and water meter development for this fiscal year and for the coming fiscal years.
If you go pre-COVID, Genus did almost 3 figures in the exports, and then there was a lot of focus which went into the domestic market, and COVID also played some major role. But now there has been a significant focus in the international market, a lot of breakthroughs in terms of product certifications, approvals, some orders have started flowing. So we have targeted next 2 to 3 years our revenue from export market should be 500 crores, and we are pretty confident of achieving that kind of numbers. And we will start seeing meaningful numbers on export from this by the end of this financial year. And then when it comes to gas meter, the PNG has clearly stated the next 3 to 4 years the country have to install 12 crore smart gas meters. So we have a clear visibility of at least a 35,000 crore industry in next 4 to 5 years. So which is, and Genus will definitely play an important role in this industry. And water meters has been at a very nascent stage, but we see beautiful traction happening not only domestically, more than domestic, in the international markets for the water meter. 2 to 3 years down the line, it will become a very, very meaningful business. And future-wise, I see it as big or even bigger than electricity. Cannot comment right now.
Okay, sir. Thank you. Got it. That's it from my side.
Thank you. The next question comes from the line of Sahil Garg with CCV Fund. Please go ahead.
Hello, sir. Can you hear me?
Yes, Sahil, please go ahead.
So I have one question on the loans and advances. There has been a tremendous increase in this particular line item from the last year, like 75 odd crores in the last year to 520 approximately crores in this year. And I understand that most of them have been given to the GEMSTAR platform, which is more like a subsidiary company. So may I know, like, what is the recovery we are looking for this particular amount, and whether do we have any plan to give any further loans and advances for this particular project?
So these are only the ongoing loans, and when I say that the company has invested 487, almost 500 crores in the GEMSTAR platform, this includes this number also. So basically, it's an ongoing. Whenever the platform requires any capital or the both way, it comes from the main sponsor GIC also and from Genus also. So it's a part of equity loan, the arrangement that has been happened between the GIC and the Genus Power, where they are 74% and we are 26%.
So every time when we give loan from the Genus Power, so there has been an increase in the equity. Is that so?
Basically, it's a combination of equity and loan. That's how the arrangement is working. So when we say investment in the platform, this includes these loans and equities and everything.
Okay. Okay, sir. Thank you.
Thank you. The next question comes from the line of Mahesh Patil with ICICI Securities. Please go ahead.
Yeah, hi sir. Sir, what is your guidance for meter installation in this financial year?
So this financial year will install more than 1 crore meters.
Okay, so around 1 crore. Okay, sir. Thank you.
Thank you. The next question comes from the line of Archit Agarwal with Step Trade Capital. Please go ahead.
Hello.
Yes, Archit, please go ahead with your question.
Sir,
Archit, I'm sorry to interrupt. You're not audible. Archit, are you there? Yes, please go ahead with your question.
Yes, sir. Thank you for giving the opportunity. So my question is about the order book. So the current order book is 25,000 crores. Can you give the split, like how much is for CapEx and how much is for OpEx?
So, Arpitji, out of this 25,000 crores, you can split it into 3 parts. So one is the orders we get directly from the utilities. One is the CapEx and the OpEx part from the platform. So out of this 25,000 crores, around 23,000 crores is from the platform. And from out of this 23,000 crores from the platform, you can split into 2 parts. That around 16,000 crores comes from the CapEx and remaining comes from the OpEx. And remaining 2,000 crores is from the regular meter orders we get from our export business, gas meter, water meter, other AMISPs, and from the utilities. So this is how you can split our order book.
Okay. And what is the timeline for this CapEx of 16,000 crores?
So timeline is this whole program has been extended till 2028. So accordingly, we have to adhere to the timeline.
by FY 28.
So this is how the government has changed the program.
Okay, sir. Okay. Thank you, sir. That's all from us.
Thank you. The next question comes from the line of Deepak Podar with Sapphire Capital. Please go ahead.
Hello, am I audible, sir?
Yes, you are. Please go ahead.
Oh, okay. Thank you very much for this opportunity. Just wanted to understand, first up, you mentioned this year around 9 crores smart meter tenders, we expect it to be out, right? So what sort of order book accretion we expect for FY27? Any order inflow target we have?
So we are confident that we will be able to maintain our market share. I don't want to put any numbers to it. It is very, very difficult. At the end of the day, we are into tendering business. But yes, we have been maintaining the market share historically, and we are confident enough to maintain the same.
Okay. And what's our current market share?
So as a AMISP, we have a market share of around 22-23%, and as a meter manufacturer, an AMISP is more than 30%.
Okay. Yeah, so AMISP would be about 20 to 23%, but meter manufacturing would be around 30%.
Yeah, more than that.
Okay. And what's the average realization per meter? So any ballpark?
Again, this is being a very customized product. We sell meter meters, 3-phase, single phase. So it is very difficult to speak on the average realization. It's a very customized.
Okay.
There's a lot of disturbance coming suddenly. I don't know.
No, it's audible. And just one last thing. So on the O&M side, you were mentioning. We expect some traction. So any percentage share of revenue that you can expect from O&M in next 2 to 3 years or 5 years?
So we can't give that number in percentage. So we are expecting in next 2 to 3 years around 800 crores to 900 crores will be coming from O&M.
In next 2 to 3 years, cumulatively 800 to 900 crores.
No. From every year it will be around 800 crores coming in next 2 to 3 years. Yeah, per annum, increasing every year. This year in FY26 it was around 150 crores. Then next 2 to 3 years it will reach to a level of 800 crores per year for next 5 to 7 years. So and this is on the basis of current order book only. Whatever the current order book the Genus has, the annuity business, the O&M business will reach from 150 crores this year, will reach to a level of 800 crores in next 2 years to 3 years on current order book. And it may be more if the order increases.
Yeah, that's pretty clear. And what's the margin profile here in O&M?
So we give a blended guidance on this. We don't give
the segmental margins. Okay. Okay, that would be it from my side. Wish you all the best. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Pranjal Mukhija with Growth Sphere Ventures LLP. Please go ahead. Pranjal, please go ahead with your question and unmute yourself in case if you're on mute.
Yeah, hi. Thank you for giving me this opportunity again. Again, just like continuing to the past question I was asking, sir, just wanted to understand, at least in our single phase meters, what kind of savings are we doing from the royalty that we were paying earlier because of this, our own mesh?
We were never paying royalty to anybody in the past also. There is no model of royalty being paid by Genus as a RF user in the past also.
Okay. Sir, wanted some idea about the Australia business. Where are we in the go live of the Australia operation? Is our product sort of ready for the market because it has slightly different specs compared to the India business? Just some understanding there.
Yes, it's a very different product. Australia market is a very difficult market to be part of. The products are ready, all the approvals and everything is on the cards, and we should be in a position to do reasonable numbers from next 3 to 6 months.
So what separates us as a company in this market, and again, what is our go-to-market strategy? Are we competing basis price, quality, features? What is it? And if you could also break down the market dynamics of the Australia market. How big is it? What kind of incumbents are present there, and how much demand are we seeing? Because increasingly a lot of
these are very confidential a lot of things are confidential for the company. I would not like to comment on the specific customer so much in details. Let it remain the purview of the company.
Right. And sir, just one last question. Wanted to understand, there were some news articles regarding our interest for IntelliSmart business. So if you could just highlight some understanding there.
So that again is not in the purview of GENUS, as we work for the platform, and the platform is majority held by GIC. So basically that will be their decision how they are looking at IntelliSmart opportunity, or what are their interests in that. So if anything happens with them, certainly we are a vendor to that.
But sir, as a company, we are very interested in that business.
Can't say anything.
Okay, sir. Thank you for giving me this opportunity once again, and good luck for future performance. Thank you.
Thank you.
A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Daria Trivedi with DJT Investments. Please go ahead.
Hi, sir. All my other questions have been answered. Just had one question. Are we sticking to our earlier guidance of achieving a positive?
Can you be a little louder, please?
Yeah. Are we sticking to our earlier guidance of achieving a positive cash flow from operations by fiscal 27?
I doubt. We will be at par for. We are improving our cash flows on every quarter, as we guided that earlier. That from every quarter there will be an improvement in cash flow, and that is happening. This financial year also there will be an improvement in cash flow with every quarter, and we are very hopeful that by end of this financial year we will be almost either at par at cash flow, or maybe a little negative. Not sure, surely not positive. But 28 for sure. First two quarters we will be, from very first or second quarter we will be cash positive. So I earlier told also that you can see the revenue growth and the cash flow negative. So it will be just half in financial year 26 from financial year 25 in terms of percentage, and same will happen in these coming years also.
Okay. And what is the peak level of net that we are targeting?
So basically net debt today on the company is around 1,500 crores, and I think it won't go more than 1,900, 2,000 crores, the max the net debt.
Okay. So what's the reason for this additional, potential 400, 500 crore increase in debt?
Yeah, there will be some investments in the platforms also, and when there will be increase in numbers, there is a possibility of increase in that also. Yeah.
All right. Okay. Thank you.
Thank you. The next question comes from the line of Sahil Garg with CCV Fund. Please go ahead.
So earlier on the call, you mentioned that there is no pass-through mechanism in the contracts, and the contracts are fixed price contracts. But obviously, there has been a consistent increasing in the raw material price and other stuff, obviously, on your business due to some internal or external factors maybe. So how we are able to cope up on the margins in that case if our contracts are the fixed price contracts?
So that's why we have given our guidance lesser for this year. We have made a EBITDA of 20.5% this year, and we are expecting a EBITDA of 18%. So basically, being a fixed price, it is affecting our margins for sure. But it is reverse also. Sometimes when it goes down, we get the benefit of that also.
So what is that saying that we have an order book of close to 25,000 odd crores, and if all of them are on the fixed contract basis, and obviously we cannot execute the entire order book in the FY 27 itself. Obviously 28, 29, 30, it will go like this. And there is no guarantee that the raw material prices will revert to the normalized level maybe in the future years, because we have signed the contracts today itself, or maybe these contracts have been signed previously, right?
We understand.
At those prices. So
we understand what you're trying to say, and we have been doing this business for the last 25 years. It's not something which is happening for the first time. This is a technology business with a lot of work on the field. We have a lot of year on year, you continuously keep improving also onto your regular working. So it is not that key. It has not happened in the past. We have seen the COVID period also. So we can assure you that yes, there will be some pressure on the margin. That is why we are giving this guidance, but it is not something which will make the things upside down.
Okay.
Conveyor is 45%. Can you hear me? Hello?
Sorry? Yeah.
So it's not all 23,000 crore is a hardware where the cost, the BOM will impact it. So BOM, it's hardly 45-50% of that, number one, and that will be completed in next 2.5 years. Rest part is O&M. O&M doesn't have any impact of the margins on these commodities or anything because of chips or anything else.
Okay. Perfect, sir. Thank you so much.
Thank you. The next question comes from the line of Chandresh Malpani with Niveshaay. Please go ahead.
Hello. Yeah, thank you for the opportunity, sir. My question is with respect to, one of our slides mentioned about ABT and DP meters. So maybe some sense on this product and what is the industry size, and is it also a tender-based business where utilities come with tender, or how is it?
Your voice is not very clear. I could not understand. You said something ABT.
Hello.
Can you be more clear, please?
Now it's clear, sir?
A little better. Some disturbance is there, a little better.
Okay. So my question is with respect to one of your presentation slides, which mentions about DT meters and ABT meters. So just wanted to understand, is it a part of, overall the RDSS scheme, or is it like how does this business work, and what is the market size, and what is Genus positioning in this market?
It is part of the RDSS meter. All DT meters, ABT meters are mostly part of the RDSS only.
Okay. And sir, second question was on the note line item of P&L because of the share of net profit and loss from associate entities. So last quarter, December ended, it was about 11 crores. So this quarter is about 4 crores. So just some sense on these numbers. How should we see these numbers? Because basically this is our part of 26% share of the JV profit. So because the installations are accelerating, but these numbers are quite fluctuating. So how should we see that?
So basically, it is not exactly coming from only from the platform where we are 26%. It is the trust holding some shares of other entities also. So notional profit and loss on those numbers also. So this is all put together. So basically, if you want to see the numbers of the platform, you can see exact numbers on the website of the platform, where you will find that there is no direct losses in the platform also.
Okay, so you are saying that across 25 projects, their numbers would be there.
So we see it as one project. As all 25 projects, we see as a one project. Because we are dealing with the platform only, which is a one entity where we are investing 26%.
Okay, sure, sir. I will go through. Thank you and all the best.
Thank you.
Ladies and gentlemen, due to time constraints, we would take that as the last question for today. I would now like to hand the conference over to Mr. Kailash Agarwal for the closing remarks.
Thank you, ladies and gentlemen, for joining us today, for your continued interest and confidence in Genus Power. We assure you that company is doing good and has done excellent in financial year 26, and you will see the same type of numbers happening in FY 27 with a positive cash flow surely coming in financial year 28. Thank you very much.
Thank you, everybody.
Thank you, sir. Ladies and gentlemen, on behalf of Kaviraj Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.